My name's Andrew Stotz from Maybank Kim Eng, and today I want to talk to you about my latest research report. In this research report, there's three strong conclusions that I look at. The first one is that everybody who wants a job has a job in Thailand. Unemployment rate is the lowest in the world. The second one is that we're having a domestic consumption boom that I think can go on for a long time because of this very low unemployment rate. The counter to that, or the paradox, is that earnings of Thai companies in second quarter actually fell by 34%. We'll talk about that in more detail inside. And then I'm going to present research that I believe is going to convince you that there's going to be no flood in 2012. Let's get into it. The first thing I want to look at is the booming economy that's happening in Thailand. I call it consumption power. This is Thailand earning about a GDP of about 4.2% in second quarter, which was a very powerful recovery after 2 quarters down related to the flood. We can see the GDP numbers here in this chart. In particular, what's interesting is that the government's investment is starting to drive GDP, and this is of course spending on improving things related to the floods and rebuilding and rehabilitating. Now also you can see the consumer is coming back. Car sales, for instance, have been very, very strong. If we look at the next chart, we can look at the domestic economy in Thailand, which is GDP minus the external factor, which would be imports and exports. And we can see that Thailand is the second fastest growing domestic economy in all of Asia right now. This chart is just absolutely shocking when you think about it. The unemployment rate for Thailand is below 1%. It's gone from as much as almost 6% in 2001 down to now less than 1%. Now, I've heard people argue with me about the statistics and the collection and the analysis of unemployment numbers, but the first thing we know is that they've been collected the same way for many, many years. So the movement from almost 6% to 1 is surely real. But I can also tell you that in each one of these different countries in this chart, you can criticize unemployment all the way up to the United States, where people have proclaimed that unemployment is much higher than the 8% that's shown in the official figures. Now let's move on to corporate Thailand, and the unique thing is that despite the fact that we have a very strong domestic economy, we've actually seen earnings fall by 34%. Why is that? That's coming because of the fact that 50% of our market is energy companies, and energy and oil prices fell in second quarter. You can see the fall in oil prices in this chart in the line, and you can see the damage that it did to PTT's earnings, which is the yellow bar. Stacked on top of that is the rest of Thailand, or corporate Thailand. This doesn't include banks. And you can see that it was a weak quarter in second quarter. Now we can also break it down by sector, and we can see that the only sector that really grew was the real estate sector. Everyone else, in particular energy and materials, were negative. That's of course driven by oil. And then if we look at return on equity, unfortunately due to these falls in earnings, we've seen ROE now down at 11%, one of the lowest levels during kind of normal times. Obviously the flood time was not normal, but we're in relatively normal times. That's one of the lowest I've seen it in years. The point is that we are struggling in the energy and material sectors, but of course we're in the third quarter now and oil prices have started to rise, so we may be past this worst point. The interesting thing on this chart is that the telecom sector actually is expanding its ROE, and it's already super high. This is because of restructuring of the balance sheet at DTAC. In particular, the company's paid almost $1.5 billion of dividends. Let's talk about the floods. My proclamation in this report is there won't be any floods in 2012. The reason for that is simple. If you look at this chart, you can see the cumulative rainfall for 2011 and 2012. Let's look at 2011 first, and you can see starting in March, we already had excessive levels of rainfall, much higher than our long-term average. And that just continued and accelerated throughout the year. But if we look at today, we can see that for 2012, now in August, we're only slightly higher than the long-term average. So we don't see, there's not a problem that I see coming from excessive rainfall. But of course, it could be that the dams are too full, so even a little bit of rainfall may cause them to overflow or have to release a lot of water. So let's take a look at all the dams in Thailand and combine them to look at what level of fullness are they. Are they at full capacity, 100%? Are they less than that? Well, here it is. You can see that they're at 45% full. This time, last year in August, they were 80% full, ready for bursting over at the seams if rainfall came. So we have a lot of protection in the fact that we've got average rainfall and there's plenty of room in the dam. So this brings me to the point to think that we're not going to see a flood in 2012. This is the last chart in the presentation, and it's related to the flood. What you can see is that the inflow into the dams in 2011 was excessive. We're nowhere near that level because of the rainfall and because of the releasing of the water from the dams. So that sums up the research for this week. The key points to remember is Thailand's got the lowest unemployment rate in the world. That is driving consumption and probably will drive it for a long time to come. We saw that earnings were down by 34%, but that's driven by oil because we know that Thai stock market is driven by oil price. And finally, the last thing I've tried to illustrate is that floods are not going to happen in 2012. Are you convinced by my strong argument? Let's talk about it. Thank you.